Welcome, my dear students, back. Welcome, all my dear students. A new lecture in accounting. This is, I believe, lecture 4. And here we are going to talk about the accounting principles, about the accounting, the theoretical part in accounting. Let me remind you quickly with what we mentioned before about in the accounting. What are the questions which we had before in the previous lectures? So we talk about accounting definition that was before, and the accounting definition we said, including 3 systems actually, the journal and the ledger and the trial balance, and that's what we see in the practical part. Then we have also the bookkeeping, which is necessary for any entity, any business entity to have its own bookkeeping system to register and record its transactions, buying or selling or whatever. Then we talk about why is accounting important. It's important, like you do accounting as example. You say you do this every day by yourself, like as example. How much did I win today? How much did I spend today? And you see the balance between them is what you gain or what you lose. So here is also, after that, we moved into define the assets, and we said that the assets are the belongings. What? The belongings, your belongings, your things, your stuff. Like if you see your desk, your table, your chair, these assets. And we divide the assets into fixed and variable assets. Fixed, we said before, that the fixed that you buy it, not for sake of itself, but you buy it to generate profits. But you buy it not to resell it again. No, you buy it because you want to keep it. You want to keep it to generate profits. Like if you buy a truck to help you in your business, we call this fixed asset. A truck to help you in your business, that's a fixed asset. Then we said the liabilities are, so if the assets are the things which you own, liabilities are the stuff which you have to pay to the others. So if I take from you $10, I owe you $10, then this is liability from my side. This is liability from my side because I have to pay this amount. Then we said the owner's equity. Another word for the owner's equity is the word capital. We said the word capital is another word another synonym for the word owner's equity, capital. And we said about the capital will equals assets minus liabilities. And I will remind you with the equation right now. So if the assets equal liabilities plus owner's equity, if you want the owner equity to be alone here, take the liabilities the other side with different single. So if I take the liabilities here the other side, I will move it here, then here will be minus. So owner's equity will equal assets. Owner's equity, here is the owner equity, will equal assets minus liabilities. That's what we said in the previous lecture. And we said there is another word for the owner's equity. We said there is another word for the owner's equity. You can remove this word and you can write instead of it the word capital. You can write the word capital. That's what we, there was plus here. So here we go back, Control and Z. This is the main equation like this way. And that's the same thing here we had before. Let me remind you. So the assets will equal liabilities plus the owner's equity. Here we go. The assets will equal liabilities plus owner's equity. And if you can see in this slide that is shown up here, assets will equal liabilities plus owner's equity. That was on the previous lecture. That was we handled in the previous lectures. We handled also some questions like discuss the accounting equation, and that is the accounting equation which we talk about. This is the accounting equation, and it must be balanced from both the sides, and it must be balanced from both the sides. Then we talk also in our previous questions, which we had about draw the balance sheet and refer to its contents. We said draw the balance sheet and refer to its contents. So the balance sheet, like you see here in the next Here it is. This is the balance sheet. Here are the assets on the left and liabilities are on the right. And the assets, we have two kinds of assets, current assets and fixed assets. And we have current liabilities and fixed liabilities. So we have from the assets, current and fixed, and from the liabilities, we have current and fixed as well. So the current assets include the cash, the account receivable, the inventory, the prepaid expenses, the investments. So the current means that it's in a figure of money and it will return back. This is the meaning of the current assets. This is the meaning of the current assets, that it's in a figure of money and it will return back to a figure of money within 360 days, which is the business year. So the meaning of this, by other meaning, like we will see in the financial ratios later on, it means that cash is cash. Account receivable, you sell for the people and you take papers. They don't have cash. They will give you cheques. They will give you promissory notes. They will give whatever. So you keep this in your safe box in the company. This we call it account receivable. Okay, you send it to them and get back your cash from them. Then in that case, it will shift into cash. Then this is current asset. Current means switchable to cash, can be switched into cash. Inventory, the same thing. The inventory is the same thing, which you keep in your company, like raw materials, finished goods, semi-finished goods, semi-finished goods, everything like that. So you keep it in your company and we call it inventory. Prepaid expenses. What is the prepaid expense? Prepaid expenses, like if you now have you have work like carpentry work, like the windows are not working well and you need a carpenter for the windows, and the carpenter came and you give him $1,000 and he didn't touch the windows yet. He didn't touch it. He just took the money, put it in his pocket, and he told you, I will come back to start working by the next week. In that case, this we call it, you register it as prepaid expenses. You register it as prepaid expenses. The investments, what are the investments? Investments are those money which you get either as profits comes to your side or as like you brought treasury bills or whatever. So these are also kinds of investments. These are the assets. What about the current assets? What about the fixed assets? Fixed assets include land, building, equipment, and list the depreciation. And we'll see next part, what do we mean by the word depreciation? This word, depreciation. We'll know what is the meaning of this word. Other assets like intangible assets, you can see it here, intangible assets, less accumulated amortization as well. So the intangible assets are the goodwills. They are the goodwills, which the name of your company. If two shops are selling coffee, one shop without name and the other shop, the name is Tim Horton, and both are selling for $1, you will go for Tim Horton, of course, because of the name. So the intangible assets means the goodwill or the name of the company. So assets is on the left side, like you see, we call this form, we call it T form. Why? Because it looks like the letter T in English, T form. Because there is another way to write down the balance sheet, we call it the report form. Report form, you will put the assets, then you will put the liabilities beneath the assets. But here, you put the assets on the left hand, and you put the liabilities on your right hand. So if there is account receivable here, and we start, by the way, since here is current assets, then you have to put the current liabilities on the other side in front of it. Don't put the fixed liabilities here. Don't switch. So current with the current, fixed with the fixed. So current here, current in the liabilities, fixed in the assets, fixed in front of it, fixed in the liabilities. Because like here, like a line, there's a hidden line in between them. Okay. Then we said we have account payable, notes payable, accrued expenses. Accrued expenses, this is the opposite of prepaid. Why? Here, you did not pay anything. The carpenter came and did his work, and you told him, hey, I don't have cash now. Could you please come to me by the next week? Then this is accrued expenses or accrued expenses, which means that you did not pay for it yet. So it's obligation for you. By other meaning, the liabilities means obligations. Liabilities means obligation. Deferred revenue also, which are earns, but it's late. You didn't get it yet. Long-term debts, and here the common stocks, if we go to this is all the current liabilities. We have also long-term debt. This is fixed liability because it's long-term. We have also the shareholders like the common stock, additional paid in capital, retained earning. What is the story of the retained earning? Those are profits. The retained earning are profits. You kept it inside the company. You didn't give it at the end of the year to the workers. The profits, usually we share the profits to be shared. But sometimes some companies say, no. We'll only share 20% of the profits, and 80% we will keep it for further expansion. As example, if we want to expand, if we want to make new plant, buy new equipment, replace the old machines with new machines, so you spend from this article, from the retained earning. That's what you spend from. And that is the two sides of the balance sheet must be balanced. The two sides must be balanced. So if one side is greater than the other, what will happen? Let's say that this side, the liability, for that reason, we call it balance sheet, because like you see here, 472,100, 472,100, both the sides must be the same. So as example, if now I said to myself, if I said to myself now that I calculated, I sum up all these numbers, they are 472. But here they were 450. Then this side 472 and this side is 450. Let's assume like this, 450. Then this side is greater than this side. Okay, then I would say to myself 472 minus 450, that will give me 22. Then I will put it in the intangible asset. I will increase the intangible asset with this amount. And I will show you on the board how I will do this. I will show you on the board how I will do this. Again, so if the liabilities is greater than the assets, then the gap between them, we will add the gap in the weaker side or the less side to make a balance, so that both of them, and we'll put it under the name. What name? If the liabilities are greater than the assets, we'll put it in tangible assets or goodwill. But if the opposite, suppose now that the assets were greater than the liabilities. Let's say assets were 100 and liabilities were 70. I will put the 100 in both of them down. And here is 100 and here is 70. So here is greater than here. So 100 minus 70, that is 30. Then I will put the 30 in the capital under the name capital here. I will put 30 under the name capital here. That's how it works. So here, that was about the balance sheet, and we will take examples about the balance sheet and see how it works. And that was what we talked about in the previous lecture. We talked about the accounting equation. We talked about, the last question was, what are the fixed assets? These are assets, belongings like cars, machines, equipment. They are, the frequency of buying the fixed assets is not too much. You buy it, yes, but you don't buy it every day. You don't buy a car every day. You don't buy a building every day. You don't buy a land every day. And most of it has depreciation. And the third thing is that it is serving you to generate profits, but not for the purpose of reselling. About the fixed liabilities, we have fixed liabilities like, as example, the capital, the long-term loans. All these are fixed liabilities. Current assets, we said they are the assets which can be switched into money within 360 days, like the inventory, the account receivable, whatever the supply materials, all these we consider them also prepaid expenses like what we saw before. Here, the current liabilities. What are the current liabilities? Current liabilities are those short-run debts or short-run obligations on you. So if the fixed liabilities are long-term obligation, current liabilities are short-term obligations. And that's what we had in the previous lectures. I'm just repeating this back just for you guys so that everyone will be okay with this and know. So if you didn't follow up what's from the start, I think you got a good idea now. And please go down back if you didn't do this and answer all these questions from 1 to 8. If you didn't do it, please do it right now because these are very important questions. Thank you so much. Here now, I shall end this lecture and shall see you in the next lecture. Take care of yourself. Have a very wonderful day.